Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a Forex example on the Euro US dollar. But as usual, before we get to the chart, we have to look at our risk disclaimer. Just to remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken. They're just shown for illustration and training purposes only. Also remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade in today's video as well. Put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do unfold. The trick is keeping the losses small, but avoiding the losses is just not possible. All trading systems will have losing trades. This is just a fact of life. All trade decisions your own sole responsibility. Right, let's have a look at the chart. The example I'd like to look at is a chart we've been following for a couple of weeks now in our MTPredictor customer training webinars, and it's on the Euro US dollar. Here's a 1 hour chart. This is the one we're looking at, and it's this TS1 Holy Grail trade setup up here. This looked to be a good trade setup because you can see I've placed a higher time frame DP. If you're on the 1 hour chart, the higher time frame would be the 4 hour chart or the 250-minute chart, and you can see we came into resistance here. The euro then declined down nicely and then has made a corrected rally back up here with a couple of potential sell setups. Let's go through training mode and have a look at these to start with. You can see there was a history triangle here. So if I go back to this red sell bar, you can see at the time, it's important to always look at what happened at the time. There was another Holy Grail sell setup here. So if I right mouse click, place the analysis on, you can see this is what the setup looks like. So what is a Holy Grail trade setup? Well, a Holy Grail trade setup is where we're coming off an important high or low, in this case a high. We make an initial decline down. In Elliott wave terms, this would be a wave 1. We make an initial correction to that initial decline. In Elliott wave terms, this would be a wave 2. Ideally, the wave 2 should subdivide into a minor A, B, C pattern. You can see here we have A, B, C. Then after a wave 2, we assume that we're then going to have a wave 3 swing. In other words, in this case, a wave 3 decline. That's why our target instantly comes down to our typical wave 3 WPT. This is the area where most wave 3s are likely to end. This is why I've nicknamed it the Holy Grail, not because it has a high percentage of winners, but because when the move unfolds, it unfolds in a wave 3, which is typically the strongest and longest swing in a completed 5-wave sequence. So in other words, it allows you to have the largest potential profit for the smallest initial risk. Remember at the start of the video I talked about losing trades. This is where we use correct position sizing. In this case, vary the number of lots, contracts or shares. In this case I'm looking at mini lots to keep your initial risk and small under control. In this case, less than 2% of a sample $20,000 account. So it's not you're going to have a high percentage of winners. It means that when the winners come through, hopefully they're large in relation to the losses. Or put the other way around, when the losses come through, which they will, you'll have losses that are kept small in relation to the winners. So let's just skip forward here and see what happens. This was actually just about clipped in there for a short trade. Then we move forward another couple of bars. And here you can see it was actually stopped out. Remember, losses can and will and do unfold. So this would have actually been a losing trade. It's always important to show losing trades when we're looking at analysis. But as I've already said, this loss was kept small at what we call one risk unit. Let's take everything off. Whoops, I didn't really want to do that. I wanted to move forward a bit, so I'll just go back on the trading mode. Sorry about that. Let's move forward a little bit further. And here we have another Holy Grail trade setup. So just as like the last one, let's right mouse click over the red cell bar, do analysis, just grab the chart up a bit, and again, because this is a potential wave 2, we're looking for a potential wave 3 swing as the target. So you can see here the potential target is 4.5 times the initial risk. Wasn't quite the same as here because obviously the market's moved forward a bit further. So let's turn trading mode off and see how this next one, whoops, just rescale the chart there, how this next trade setup has actually unfolded. Just rescale it a bit. Drag that across, you can see what's happened. As you can see, the market has declined nicely and basically has just hit the target. We wouldn't be looking for buy setups here because we're in currently in a short trade on the way down. So even though this MTP trend was flat, there was no reason to swap to a long trade here. Also, there wouldn't be a buy setup here because this was against an MTP red trend, which is a downtrend. So as you can see, the market has indeed reached this potential profit target. But the nice thing is here the profit is large in relation to the initial risk. So even though we made a losing trade back here, this loss was kept small at -1R. The profit here would now be plus 4.5R, or 4.5 times greater than the initial risk. We'd probably be coming out of the target because our MTP trend indicator is what we call weak. In other words, is less than our grey strength band here. So this is a good example of what we call a Holy Grail trade setup. Again, the reason we call it Holy Grail is not because it has a high percentage of winners, it's because when the winners come through, they're large in relation to the initial risk. Because what we're trying to do with the Holy Grail trade setup is we're trying to catch the wave 3 in an Elliott wave sequence. So here we start at an important high or low, in this case a resistance on a higher time frame chart. The initial decline down would be wave 1, an ABC correction up into wave 2, then we're looking for a strong wave 3 swing. That's what creates the small initial risk and the large profit potential. Again, we've actually been following this trade setup in our MTP customer training webinars, so I wanted to do the video today just to see how it eventually unfolded and to show you that it has indeed reached the typical wave 3 WPT target where a plus 4.5R profit was available. So a good example of our MTPredictor Holy Grail trade setup unfolding on the euro over the last few days.